Hello, my name is Bernard Finley, President and Chief Executive Officer of HAON Inc., trading on the OTC Pink Sheet market under ticker symbol HAON.PK. Over the next 5 minutes, I will outline my background and track record over the past 20 years, present the current business model and operation, and briefly discuss the incredible opportunity that the initial investment will provide to the business. Before I get started, I would like to thank you for your time. For the past 20 years, I've been working with small to mid-sized businesses. The first part of my career in growth opportunities in which we would build up sales and sell the business off, and the latter part orchestrating a roll-up of 16 bankrupt and distressed brands. While growth initiatives are very different than turnaround work, I have gained extremely valuable knowledge of how to take advantage of strength within a business, reshape the business plan, and then execute on the deliverables. I've worked in many industries like medical devices, promotional products, and direct marketing, to name a few. Over the past 5 years, I have rolled up and then exited 16 brands that, without my guidance, were bankrupt or out of business. Today, these brands exist and are operating under new owners. The roll-up experience provided the base building blocks of my new business model, basically taking the best of what I've learned and leaving the clutter behind. Great revenue growth, high gross margin, and low overhead. Manage your assets tightly and try and apply as little external capital to the model and allow cash flows to fund operations. It may sound simple, but in actuality, very difficult to implement and achieve. My objective is to roll up digital marketing properties into one operating infrastructure. Growth will be achieved through organic growth and development of acquired brands, as well as through additional acquisitions. I have acquired the control shares of HAON Inc., been appointed President and Chief Executive Officer, merged in the operating entity NVG Holdings Inc., and now I'm raising capital. My objective is to raise as little capital up front and go through the process of filing an S-1 registration with the SEC, which will provide liquidity for shareholders of this round. Going forward, we will use the stock as a form of currency for future acquisitions as we continue to create value. The business model that I have created with NVG Holdings Inc. has 2 locations, one in Newtown, Connecticut, that will house all intellectual capital like sales, marketing, finance, management, and the Tijuana facility with a small depot in San Diego, California will handle manufacturing, warehousing, and distribution, and any task that is labor-driven. Labor costs in Tijuana are around $4 per hour fully loaded. With NAFTA in place, product is moved in and out duty-free, which provides a competitive edge over manufacturing in the Far East. This is a huge cost savings compared to manufacturing and warehousing in the U.S. market. As an example, let's follow an order through operation so you can see how efficient the model actually is. First, we acquire a cool website that accepts orders for tangible and service-oriented products. Marketing drives sales through the latest digital marketing techniques, including SEO, pay-per-click, PLAs, email blasts. In some cases, we use other traditional sales techniques that are particular to an age brand, like an outbound call center, outside sales force, or even catalogs. Orders are processed online and are automatically uploaded into QuickBooks Enterprise. QuickBooks Enterprise is hosted in a cloud environment through the right networks. QuickBooks is synced to Salesforce.com, where financial data is merged with sales data. Salesforce.com has a power dialer provided by Inside Sales. This allows us to efficiently make hundreds of outbound calls and at the same time receive just as many calls. Depending on the product line, tangible orders are processed in Tijuana, Mexico, and a depot in San Diego, California. This includes pick, pack, ship, as well as labeling. Once the order is crossed, it is delivered directly to a major carrier like UPS, FedEx, or the U.S. Post Office. Intangible orders are processed, and the product is digitally delivered to the end user. The cost for this process: one-time charge of $3,000 for the accounting software, $100 per month for the website, $70 per user for the cloud environment, $150 for Salesforce.com and Inside Sales, and that's it. $320 per user per month. This whole process is fully automated, utilizing very simple software that is easy to use. No IT department or custom programming is necessary, further reducing costs. The business model has been set up to plug and play. As each new acquisition is consummated, the acquisition team will roll the business into the current infrastructure, and we are off to the next acquisition. The operating team will embrace the acquisition target and begin the process of growing the brand efficiently and organically. In summary, I have a 20-year track record of closing acquisitions, both growth as well as distressed. Now that we have merged the operating entity with a publicly traded company, we will continue to operate efficiently while organically growing and at the same time continue to evaluate about a dozen acquisitions that have been targeted and are at varying stages of negotiation. The initial raise will provide the base capital to continue to implement our business plan. I have retained legal and a finance group to provide HAON Inc. with a clear and concise exit strategy for our accredited investors through an S-1 registration on the investment. We have also engaged a PCAOB auditor to complete an audit of both HAON Inc. and NDG Holdings Inc. following the capital raise. Again, thank you for your time, and I look forward to discussing the business in the future.